The American economy is currently in a complete shamble. We'll discuss a number of facts, warning signals, statistics, and forecasts that demonstrate this in today's video. The US economy has been progressively declining over the past 2 years, and millions of Americans have never fully recovered financially from the economic shocks caused by the health crisis. Additionally, they have been dealing with the highest consumer prices in more than 40 years, and living costs continue to rise across the nation. As their purchasing power declines, US consumers are losing faith in the economy and have cut back on spending. Due to this, we've gathered several crucial signs that America is once again heading in the wrong direction today. Welcome to 360 Economist YouTube channel. Please support us by giving this list a thumbs up and becoming a subscriber to our channel so you don't miss our forthcoming lists. Here are 15 startling facts concerning the dysfunctional status of the US economy. Without further ado, 1. A key sign of the difficulties ahead is the first quarter of 2022. The US economy shrank in the first 3 months of the year, the first significant decline since 2019. A significant decline in exports, a delay in replenishing inventory in stores and warehouses, and a significant rise in the trade deficit have all contributed to a decline in GDP. Deutsche Bank experts are warning that this slowdown is preparing the economy for a financial crisis. The issue is that, despite the fact that inflation is still skyrocketing, economists predict that it will take a very long time for it to return to the Federal Reserve's target level of 2%. That implies that the central bank will increase interest rates in such a way as to harm the economy. We thought it was very likely that the Fed would need to apply the brakes even harder, and that the severe recession would be required to heal the inflation problem. In a research with a gloomy heading, Why the Impending Recession Will Be Worse Than Forecast. 2. According to a CNBC study, more than half of economists and investment experts believe the Fed will fall short of its goal of orchestrating a gentle landing for the economy. 80% of small business owners anticipate a recession this year, the fourth quarter of 2022, according to the most recent CNBC SurveyMonkey small company poll. The biggest concern for small firms is still pricing increases. The survey also revealed that only 18% of small business owners think the current economy is good, while 44% assess it as poor. Few of them find any bright spots in it. 3. The fact that people are depleting their savings is a crucial indicator that the economy is deteriorating. Millions of households are already in negative savings zone, which means they are progressively using their savings to pay for monthly expenses. Dan Schulman, CEO of PayPal, has raised concerns about the state of US households' finances as a result of this. In addition, Schulman noted that we're already seeing a slowdown in spending at lower income levels for sure, because of excessive spending and high inflation. Americans may run out of savings by the end of this year. 4. In keeping with this, a recent survey by the market research firm NPD Group found that more than 80% of US consumers intend to make less purchases in the upcoming 3 to 6 months. Consumer spending decreased by 6% during the first 3 months of 2022, and the same time in 2021, according to the survey. Big box brand revenues are already suffering due to the slowdown in consumer spending, which could spread throughout the entire economy. 5. Over the past year, Americans' purchasing power decreased more rapidly than it did over the previous 10 years. Americans lost 5.4% of their purchasing power between March 2021 and March 2022. On average, 0.45 percentage points per month as consumer prices increased by 8.5%. But wage growth lagged below inflation. A record high for short-term expectations was 5.4% over the following year. Because inflation can quickly turn into a self-fulfilling prophecy, those expectations are important. 6. All over America, consumer confidence is gradually declining. The current level of the U.S. Consumer Mood Index is 58.4%, down from 65.2 last month and from 82.9 a year ago. According to data published by the University of Michigan, this represents a contraction of 29.55% from 1 year ago and a decrease of 10.43% from last month. The figure was lower than all expectations in the Bloomberg survey of analysts, which called for a median reading of 64. 7. Common household expenses are still much higher than they were a year ago. For instance, food prices rose 9.4% last month, the highest 12-month increase since 1981. Meats, poultry, fish, and eggs witnessed an increase of 14.3%, while fruits and vegetables had an increase of 7.8%. Electricity prices increased by 11.1%, utility services by 22.7%, furniture and gambling by 15%, household cleaning items by 10.1%, and gas prices increased by 37 to 47% nationwide. 8. For instance, according to the CPI report, prices increased by 9.1% in the South and 8.7% in the West during the course of the same year. The average cost of inflation per household increased from around $100 in April 2021 to more than $380 in January 2022. The biggest inflation rates are being felt by Americans in the mountainous states of Utah, Colorado, Arizona, New Mexico, Montana, Idaho, and Wyoming, where household expenditures increased by more than $500 in January. 9. Given all said, it makes sense that almost half of Americans, around 47%, think that the biggest danger to their financial stability is the expense of living. According to TD Ameritrade's Financial Disruption Study, 44% of respondents expressed worry about the cost of healthcare growing. 10. It makes sense that almost half of Americans, or around 47%, think that due to tighter budgets caused by the rising prices for necessities, American consumers are accruing record amounts of debt. The first quarter of 2022 saw a startling record high for consumer debt of $15.84 trillion. 11. Mortgage debt makes up 71% of total household debt, a figure that has been steadily rising. Since the start of the health crisis, consumers have created $8.4 trillion worth of new mortgage debt. In actuality, the median home price has surged by 30% over the last 2 years to $428,700. 12. In addition, the percentage of Americans living paycheck to paycheck has increased in the first few months of 2022. According to data by Lending Club in April 2021, 52% of Americans reported living paycheck to paycheck. Today, 64.4% of Americans, or 166 million persons, are doing the same. 13. Approximately 67 households currently feel that their income cannot keep up with their living expenses, according to the most recent Middle Income Financial Security Monitor, published by Prime America. According to a second survey by One Poll, the typical American thinks they need an income of $86,000 in order to be secure financially. 14. Millennials and members of Generation Z are frightened of the economy since they have never experienced one. Only 28% of people, according to a survey by Deloitte, believe that the economy will become better over the next 12 months. 15. Americans will witness things getting worse once more. The first signs of fissures are already visible, according to several financial analysts. In the last week, Goldman Sachs also lowered their outlook. The experts at Bank of America revised down their predictions as well, expecting that the economy will only grow by 0.4% through the end of the year. We are currently experiencing a long-term economic downturn, ladies and gentlemen, and it is obvious that the system no longer functions as it should. This is just the beginning of our issues because of years of careless financial decisions. The US public can already sense that things will only get worse from here. Do you sense it? Leave your comment below, and see you in our upcoming videos.